Hello and welcome to Market Today. I'm Siddharth Zarabi and joining me now is Ajay Kumar Srivastava, Director and CEO of Indian Overseas Bank, which has delivered a robust set of numbers. In fact, net profit rising to a record 24% at 808 crore, the highest ever quarterly profit. This is for the fourth quarter under review, against 650 in the same period a year ago. Mr. Srivastava, welcome to the show. Take our viewers through the reasons that led to this record profitability.
Yes, basically interest income has increased. Our credit growth has been up to the extent of 16% over last year. And interest income has grown by, the net interest income, that has grown by 19%. And that is the basic reason of increase in profit. And the other factor was that there is hardly any provision requirement. So the less number of provision because slippages have been under control. And these two factors have contributed to increased net profit, that is one fact. And operating profit also, we have shown a growth of 14%, around 13%, 13 point something. So that has come basically on account of increased interest income.
Mr. Srivastava, what is the strategy that you are working on in the current financial year to maintain and improve upon these set of numbers that you have delivered in the previous year?
Yeah, the intention is to do better in this financial year. The strategy will more or less be the same, that we have to grow both sides, assets as well as liabilities. So credit side, we have been doing well over last 2 years. If you see in 22-23, the credit growth was around 24%. Last year it was around 16%, and we intend to grow by 13-14% in that range. And by growing lending, I think the growth which we have shown in operating profit and net profit, that will continue in this financial year also, unless until some sudden shocks are there. Otherwise, we are pretty sure that our performance will be better this financial year as compared to last year.
Are you fearing any sort of shock that could upset the apple cart?
Not really. Everything is stabilized, and there's nothing visible. I'm just saying that in case something happens, other than that, we are absolutely on track, and we do believe that we will be able to better our performance.
Mr. Srivastava, if the RBI's proposal, the draft proposal at this stage of 5% provisioning as far as infrastructure exposure is concerned, if that were to come into effect, although the Indian Banks Association and various contemporaries of yours in other public sector banks have gone on record to express their point of view, will that have a significant impact?
As far as IOB is concerned, we are having a very small portfolio, less than 10,000 crores.
Okay.
The impact on IOB will not be that much, but having said that, these guidelines are only draft guidelines, and unless until the final picture emerges, it will be difficult to go about the impact on the balance sheet. I think it will be very minimum, and of course, if it is implemented, then the cost of lending will increase from bank side, and a part of that will have to be borne by the borrowers.
Absolutely. One of the key highlights, and you mentioned that in the fiscal year, has been your exceptional control over slippages. And the numbers, only 1,517 crore of slippages, accounting for just about 0.87% of your performing advances as of March 2023. What's the outlook as far as this aspect is concerned? Do you expect that you will continue to have fewer slippages and higher recoveries?
Yeah, we intend to do this. Last 2 years, our recovery has been more than whatever slippages we have done. And this year's slippage ratio, as you mentioned, 0.87, we intend to do better than this. Of course, credit growth will happen, and with that credit growth, the efforts on monitoring also increases. But having experience success as far as slippages control is concerned. I think entire portfolio is absolutely under control, close monitoring is there, and we do not see any stress also in any of the products or the sectors. I do
Okay.
believe that we'll be able to do better than this. And one more positive aspect of this slippage is that last full year, not even a single corporate account has slipped as far as IUB is concerned. All slippages have happened in small value, retail, agri, and MSME only. So that also speaks a lot about the monitoring aspect and the quality of underwriting which we are doing.
So if the corporate part of the book is doing well, as you point out, do you think the retail part, especially the fresh slippages that you mentioned, will that continue to be a concern this year? And is it linked to certain weakness in the economy and stress that is accumulating in some sectors?
No, there is no stress as such in retail or MSME or even agriculture also. These are normal slippages, I will say, which happens because of some individual issues of the borrower. But overall, as a portfolio as a whole, I do not see any stress building up in any of the portfolios.
Okay. Mr. Srivastava, the net interest margin strengthened to 3.28% versus 2.93%. Do you expect FY25 to continue to deliver similarly as far as margin expansion is concerned?
See, effort will be there to maintain that, but going forward, challenge is always there because we all know that raising deposit is a costly affair now. And if we are going to increase rate of interest on deposits, then naturally some pressure on margin will be there. But we are trying to offset, like this year also, we have offset this by increasing our lending and lending to those areas or to those borrowers from where we are getting high yield. And the second aspect of this is that while going for a deposit, we are focusing mainly on CASA, that low cost deposit. If you see the percentages, our CASA percentage has increased from 43.74 to 43.90. And all along, over last 2 years, we have been maintaining our CASA percentage above 43%. So this 43% or 44% of CASA adds strength to my balance sheet. And as we are focusing on CASA, and substantial growth is also happening. Last year also growth is 10% as far as CASA is concerned. So these two factors have contributed in increased NIM, and I think going forward we'll try to maintain at this level only, and we should be able to do it.
What are the targets that you have set for your operating team as far as NPAs are concerned for financial year 25?
Yeah, NPA, if you see, it has come down from 3.90 to 3.10 in this year, and we intend to reduce it by at least 100 bips in this financial year. So maybe by February 20, March 25, when it's getting over the financial year, we are looking at GNPA percentage of 2.10 or 2.15, something around that. And net NPA, we are looking at around 0.25 to 0.30 at that level. Right now, we are at 0.57% as far as net NPA is concerned.
Mr. Srivastava, the plan to sell 92 non-performing asset loans of around 13,500 crore in 2 lots, how will that pan out, and do you expect all of that to be completed in the current financial year?
Yes, exactly. I'm very hopeful. That is why we started this process in Q1 itself. Beginning of financial year, we started working on it. And these 92 accounts, of which 51 are NCLT and non-NCLT accounts, and 41 accounts are sole banking by IOB only. And in fact, some of the accounts are having good security value also. We are trying to unlock the value, and this 13,000 crores, we are getting good response from the market. We have got EOIs, and most of the ARCs are showing keen interest. It is still under process, the due diligence part. I do hope that substantial number, I do not say that 100% of 92 accounts will be able to sell, but that is our intention, and let us see how it pans out. But we are very hopeful.
And will this contribute significantly to the 100 basis points reduction target you just outlined as far as NPAs are concerned?
Oh, that 100 basis point reduction is exclusive of that. This will basically add to my P&L, the income part.
Okay, it will add to your income. What about deposit growth and advances? We'll take that in two parts. How do you see deposit growth scenario panning out in the current financial year?
Yeah, as I said earlier also, raising deposit is getting a bit difficult, and it is this is prevalent over last more than 1 year. Everyone is struggling to raise deposits, and that is why raising deposit has become a costly affair. Still, we have grown by 9.6% year on year, and out of that, CASA, in fact, CASA has outgrown. CASA we have grown by 10%, but total deposit has grown by 9.6% only. Our intention is to clock around 11% of deposit growth in this financial year. We have started working on some of the strategies. And credit growth, of course, 13 to 14% we are eyeing. And I'm pretty confident that 13-14% of credit growth and 11% of deposit growth we will be able to achieve.
What will drive advances growth in the current financial year?
See, if you see last year growth also, it has been all along uniform. There is not any particular sector or product in which we can say that we have grown exponentially. It's panned out, retail also, agri also, MSME also. In all these sectors, our growth has been around 14 to 15%. Retail, agri, MSME, and corporate also. So going forward also, the same strategy, because we are a commercial bank having 3,200 branches all across the country. So any product which works in, say, Kolkata or Guwahati, the same product may not work in Tamil Nadu. So region-wise, geography-specific, we are having products, and based on the requirement, we revisit those products, those schemes. And so the current year also plan is that we will be growing uniformly across all products, all sectors, and overall 13 to 14% growth will be there.
Your branch expansion plan, as I understand, is almost 88 new branches. Is this geographically widespread or focused on certain key growth areas?
No, it's spread across the country. In fact, this 88 number came from our foundation year. We are in 88th foundation year as far as IUB's existence is concerned. On 88th foundation day, we decided that 88 branches will be opening. You must be knowing that bank was in PCA for almost 5 years, and during those periods, we were not allowed to expand as far as number of branches are concerned. So we are trying to make that out to compensate whatever we lost during those 5 years. So 88 is the base number which we are trying to open, and we are pretty sure that we will be opening that. But 88 is just a base number. We can go beyond that also. If potential centers, we can find out that yes, by opening branches here, we are going to get good quality business and profit is generated. We can go beyond 88 also.
What about digital investments and expansion? How much investments do you propose to continue to shore up the tech part of your operations?
Yes, last year, in fact, the investment in total IT DVD infrastructure was around 1,100 crores. This year, we have planned around 1,600 crores. The investment part, we have increased capital and revenue both. Around 1,600 crores is planned for this year.
And where will this incremental 500 crore be invested in?
In both hardware and software and upgradation of software, some new softwares we are going to onboard. So it's an ongoing process. There is not one particular thing I can point out, but overall total IT infrastructure and digital infrastructure we are revamping by refreshing the existing ones or by going for fresh hardware and software. The entire thing we have planned for this year.
Mr. Srivastava, you have board approval for fundraising. When is that likely to start, and do you plan to pick up entire 5,000 crore as seems to have been approved?
We intend to do it in 2 to 3 tranches, depending on the market conditions. And the process has already started. We intend to actually start doing it maybe by end of Q2 and Q3.
Okay. One final question, and this is what should consumers expect as far as lending rates are concerned? We are seeing what is happening at the repo level. Do you see a change in the rate cycle, and if so, by when during the current financial year?
Yeah, it's difficult to it's difficult to predict because that is RBI's prerogative. We were expecting rate reduction last year also, but inflation is fallen, and that is why it has not yet happened. Going forward, we do hope that by Q3, maybe after September Q3, some reduction can happen. And for most of the banks, the total retail and MSME portfolio is linked to repo, external benchmark. The moment repo is reduced, then all retail and MSME portfolio of all banks, the rate of interest will automatically get reduced, and that will be providing some relief to the borrowers.
Absolutely, Mr. Srivastava, and we'll wait for that to pan out. But viewers, Mr. Srivastava has taken us through the performance, and it's a robust set of numbers and consistent performance over the last 6 to 8 quarters. Mr. Srivastava, thank you very much for joining us today here on Business Today Television. We hope to see you again. Until then, goodbye.
Thank you. Thanks a lot.
Once again, we have delivered excellent numbers. I'm happy to share that our net profit